In the meantime, we'll show you the scorecard here with 60 to go in regulation. Been a mostly down day for the majors. NASDAQ is flat. The others are pretty much as well. And that's following Friday's big gains. Sectors, they're mixed today. Tech and comm services are leading. Healthcare and staples have been the biggest laggards today. We're watching CSX shares falling on reporting from both Becky Quick and David Faber today that a deal between that company and Burlington Northern, owned by Warren Buffett's Berkshire Hathaway, is unlikely. Elsewhere, Nvidia, it's higher ahead of its highly anticipated earnings report on Wednesday. Takes us to our talk of the tape. Now what? After Chair Powell led markets to believe cuts are coming, potentially in September. Let's ask Dan Greenhaus of Solus Alternative Asset Management. He's with me here at Post 9. Nice to see you.
Thank you for having me, sir.
That was your takeaway, right? This is now done for September?
Oh, yeah, I think this is 100%.
What? So you get 1 day in the market out of that, or what?
Well, it's always hard to read into any day, especially late in August when no one's around except for me. I don't see any way, but there's no way he inserts the sentence he inserted about the likely path being lower without having some feeling with respect to the consensus on the board that a rate cut is forthcoming.
Okay, so what does it mean then for this record-setting rally?
Well, I think there's a lot of people who come on here and say, who cares about 25 basis points? And there's a lot of truth in that. 25 basis points in one way or the other doesn't matter. But it is a signaling a demonstration to market. It's a signal that you are aware the data has changed, which he acknowledged in terms of the labor market revisions that we got. It is a signal to market that he is aware that people are pricing in a rate hike and a rate cut. And when you have probabilities as extended as they are historically, very rarely do they deviate. So I think it does matter in the sense that, to use the phrase everyone uses, the direction of travel matters, and lower rates are better than higher rates. But at the same time, on its own, 25 basis points isn't really the issue.
Most of what I saw today in terms of commentary from the street was bullish.
Sure.
People either raising their targets or saying the trend is up, and this only confirms that. Is that your belief?
Well, my argument for a year or two now has been you don't need rate cuts for the market to move higher. The AI story is so dominant, so pervasive throughout markets that, and so rate insensitive in the sense that a lot of this is being funded out of cash flow.
Wait, hold on. So if he would have, Powell being he, if he would have been hawkish on Friday in Jackson Hole, you think the market would have been just fine with that?
No, well, listen. Short-term movements aside, the question is, could the market have continued to move higher, the equity market, without the promise of a rate cut in September? Maybe not in the short term, but in the medium term, measured here in closing bell time frames, several months.
Well, between now and the end of the year.
Yeah, I think certainly you don't need a rate cut for that to happen. Because, again, the story driving markets right now is the economy is doing okay. It has decelerated somewhat over the last couple of quarters, more so than we originally thought prior to that revision. But what's been driving markets across the board has been that AI story, which is rate insensitive for all the reasons I just mentioned.
Yeah, but I mean, I think the AI story's been questioned more of late than it has been in the broader picture.
Yeah,
right? I mean, you got people talking about the possibility of bubbles with CapEx.
Listen, people are questioning it more, but not based on
not just anybody. I mean, it's like Sam Altman.
Sam Altman said that's fair.
People like right in the mix.
Howard Marks started talking about a bubble.
Okay.
But I would acknowledge and concede, and have already done so, will do so again, there's a bubble forming here. The problem with that as an investor is, what do I do with that? If you told me there's a bubble, one of my favorite articles that I have in my office is Floyd Norris in 1995 talking about a tech stock bubble. What good did that do me? Greenspan's irrational exuberance speech was 1996, December. What good did that do me? So you have to, as an investor, keep an eye out on the fundamentals. And I know people are talking more about a bubble, and rightfully so. But at the end of the day, cloud growth was up, 30%? CapEx expenditures are still hundreds of billions.
All right. So dance till the music stops.
Chuck Prince gets.
I know. I was going to mention his name, but you did, so I didn't have to.
Because we think alike, Scott. And for good reason.
But seriously, that's the point you're making. Dance till the music stops.
Chuck Prince gets a lot of flack. Got a lot of flack. I don't think anybody thinks about it anymore, but got a lot of flack at the time for saying you have to dance as long as the music is playing. But as an investing axiom, it is very true. You really, the story is still ongoing here. And I would counter, to the extent that we compare this to the 90s bull market, and I know I've done that repeatedly and others have as well, all the warnings that came about at the end of that cycle are nowhere to be found now. No company has restated earnings or has taken down guidance. CapEx is still going up. Profit is still extraordinarily high. And you haven't seen any of the, well, hold on. You haven't seen much of the excesses that emerged towards the end of that cycle.
Now, if you would have said we don't need rate cuts because earnings just prove to you that that part of the story is good enough to justify where we are, that rate cuts are just the cherry on top. They're not the whole taste that you need right now to feel great about the market.
Yeah,
you think earnings are good enough?
The earnings were great, as has been discussed repeatedly. I won't add to it. What we're talking about now are what I'll call insurance rate cuts. The economy is okay. People keep talking about, does the economy need rate reductions? Does the stock market at all-time highs, credit spreads at tights need? It's not about need. It's about we're taking out, I think, the way I'm going to look at it as an investor, is the Fed is taking out some insurance to ensure that some of the weaknesses that we've seen in the labor market, which could be a mix of immigration and tariffs and economic slowdown, we don't know yet, but let's take out some insurance to make sure that whatever weakness, or to help ensure that whatever weakness
so now they're
we're
in the
seeing,
insurance business.
Well, the Fed's always in the insurance business, at least on the downside. They want to make sure that this doesn't metastasize into something worse than it otherwise has to be, to the extent that we have 10 people in a room deciding what the cost of money is.